You wish you had bought some Bitcoin before 2017 because then you'd be rich. But imagine you had created your own coin in 2013 and that coin was now sitting in the top 40 of all cryptocurrencies in the world. Man, you think you would really be rich. Our guest did exactly that, but he did not get a stake early, and he did that with a good reason, for the good of the coin.
Coloring Crypto.
Welcome to Coloring Crypto. Today's guest, illuminating the blockchain, is Jackson Palmer, who 5 years ago created Dogecoin. Created partly as satire, it's valued in total at over $1 billion today. We're going to tell the origin story of Dogecoin in a future episode of Coloring Crypto. But today, we tap Jackson's rare insight, starting with his take on the last year in crypto, and how in terms of cryptocurrency as an investment, it may have been a great year, but in terms of proving the purpose of crypto as a currency, it may actually have been a bad year. It's ironic in a way that a coin made as a joke may actually prove to have more integrity and perhaps more utility than most of the coins created this last year. Finding a voice of reason amidst the flurry of hype in this space is rare, and I'm grateful for Jackson's humility, his wisdom, and his effort to bringing clarity to the picture we're painting of the blockchain.
I think 2017 was a really good year for early adopters of cryptocurrency insofar as their pockets. I think 2017 lined the pockets of people who were lucky enough to have bought some cryptocurrencies in the past. I'm actually not really even included in that because I didn't hold a lot of cryptocurrency before 2017. And for cryptocurrency as a long-term for cryptocurrency fulfilling its long-term initial goal of replacing regular currency, I think 2017 is the worst year we've had thus far. Yeah. Because I think what it's done is that you're right, it's cemented it as a crypto stock and not as a cryptocurrency. And, we're at a point where, back in 2012, 2013, when we were first, when it kind of got in the spotlight for the first time and merchants were starting to adopt it, you had like the overstocks, you had the steams, you had, we were kind of excited about that. And then, back then there was difficulty in sending payment to somebody. Like if I wanted to send you some money, we were out at a bar and I wanted to pay you back for something. In 2013, that was actually kind of hard. I couldn't just Apple Pay you. I couldn't just send you, $10 in Facebook Messenger of all things. And so honestly, that vision seemed achievable to me back then. It was like, you know what, like this is a real friction point and something that there's desperate need in the market for. Facebook and Apple were paying attention as well. And in the years beyond that, I think because we didn't do anything to improve the scalability, and we focused mostly on how we can improve, how we can raise money and invest in cryptocurrency. The competition being the Venmos, the Apple Pays, the Facebook Messenger payments, they overtook that use case, right? And a lot of people are like, well, you know what, that doesn't kill cryptocurrency, that doesn't kill the virtues of decentralization and all of this, fun stuff, which I totally buy into and I love. But what it does do is it makes there be a huge switching cost for anybody that wants to try and lure them away now. Like it's a lot harder to say to anybody right now, you should be paying your friends back in Bitcoin and paying a $50 transaction fee when you've got they can send that money to their friend through Facebook Messenger.
Why do you think Apple and Facebook and those huge, why have they not just, why is Apple Pay depending on the network of credit card companies?
Yeah, because there's not really anything in it for them. Like I think what a lot of people don't understand about like traditional fintech and the reason that fees exist is that honestly, like from a middleman perspective, a lot of the efficiencies are being squeezed out of the centralized payment systems that we use day to day, right? So a lot of when you swipe your credit card, a lot of the efficiencies, that could be had are already being taken advantage of. There isn't a lot of room for Apple or Facebook to come in and disrupt that necessarily. The fees that we pay, the 3% fee here or there, is almost entirely made up of insurance, right? And this is something that people don't understand. Like, it's made up of insurance to protect against fraud. So when somebody steals my wallet and they go in and they buy like $500 worth of stuff on my credit card, that credit card company needs to have insurance on that card so that they can pay me back the $500 they're assuring me they can with their fraud protection. And so like that's where the fees are. The fees that you're paying when you use traditional financial systems are insurances for when you do get hacked. And so I think in the case of, say, Apple and Facebook Messenger, they don't want to get into that game because there's very little blood to be kind of like squeezed from that stone. And they don't want to have to deal with all, setting up new insurance and fraud protection, like all of that stuff.
Let's say I have a card. I can go buy beer at a store, but it's a cryptocurrency card. Mm-hmm. And I swipe that card and there's super low transaction fees. But if somebody finds my card, I have got little to do in terms of like getting my money back from that person that got my card and swiped it and bought other stuff.
Correct. Absolutely. The thing is that with something like Bitcoin, a cryptocurrency, you are your own bank. And that is really appealing, right? But it also places the onus, all the responsibility on you to protect your own security. There is no insurance. There is no, fraud protection when it comes to cryptocurrency because it's all down to you. And I think that's the big difference there. Like a lot of people ask me like, why hasn't Facebook or Apple done like Apple Coin, right?
Yeah.
And you know why? Because they don't trust users.
Yeah.
Users are extremely unreliable. Do you think that every like 15-year-old should be entrusted with private keys that they can then lose or mess up with? And then who do you think the parents are going to come back to? They're going to come back to Apple and say, "Hey, your technology messed up." They can't turn around and be like, "Oh no, your 15-year-old was their own bank." Like that. That is why they haven't gone down that route. They've gone down the safest and least liable route for themselves.
Right. I mean, it sort of like plays to what's been happening in the last 10, 20, 30 years of our reliance on just trusting our banks and trusting our sort of like the corporate things we sign up with. Like, if I lose my password, I can always like hit lost my password. The concept that I have my passphrase and that is it. That's the end of the line. Like that's a concept that I think we're kind of conditioned in the last 10 years to not understand.
Well, I think that exists for a reason. Like I'm very much not a libertarian leaning person, and I think for libertarians who like very much want to own everything and be anti-state and anti-trust in a way, they like that. They like that premise of having control over everything. But I think there's if you go back in history, it's not like banks and insurance companies like sprung up out of pure evil, right? It's not like some like supervillain was like, I'm going to create banks to destroy people's lives in the future, right? Like that is not how these institutions came to exist. They came to exist because people cannot be trusted to be their own banks. Right. And so I definitely have faith in the system and the state and all of that stuff. That doesn't mean I don't think cryptocurrency isn't a good idea, because I think there are certain efficiencies and, audit trails as well. Like I think the thing that I like most about cryptocurrency and the reason I stay involved in it is not because, I really think that everybody should be their own bank and we should destroy fiat currency. I think that's a terrible idea. I think the reason I stay around is that cryptocurrency and the blockchain in particular provides an extremely auditable way of making sure that those institutions are trustworthy. And I think, that's what we don't have at the moment. We, when we enter things like global financial crises and, bankers, engaging in all sorts of illegal activity, if that was all captured in a auditable blockchain or ledger, then we, the people, would be able to keep our leaders and the people that we're placing that trust in check. We don't have that today. And so, but to say, but to turn that around and say, okay, let's go to the very polar opposite of what we have right now. Everybody is basically sitting on their own pile of cash, and if somebody comes up and steals it from you, it's your own fault. Really don't think that's feasible or realistic.
Okay, help me understand this term immutable. As I understand immutable, it means like the concept of like when you write to the blockchain, there is no undo button. If we keep having speculation drive the prices up of these cryptocurrencies, and that pulls away from the advantage of them being a useful utility. So yeah, what happens next?
Yeah, so I think that, so first off, immutable simply means it can't be changed, right? And so, mutable means, if you just think of a piece of writing, here's a way I like to think of it is it's pencil versus ink in a way, in that something you write in pencil can be erased and rewritten, whereas ink is, on that paper at least, seemingly forever. And the beauty of math and cryptography is that you can, by using algorithms, you can make it so that you have essentially a database or a spreadsheet, if you want to make it even simpler, that once something is written into it by somebody, it can never be changed. It's always there. And that's the beauty of the blockchain. So in terms of audit trails, that is what it provides. Now, there's a whole other problem, with these things called privacy coins, and it's not really a problem, but there's people that don't want all their, their dirty laundry out there for people to inspect, right? Because, of course, there's a lot of shady business going on, and cryptocurrency is being used for a lot of shady things, so they want to hide that. But yeah, I think in terms of where it goes next, I think we're already at a point where cryptocurrency isn't being used as a currency. Like, I think 2018 will be the year in which cryptocurrency is finally kind of written off as a potential cryptocurrency in its current form, at least, is finally written off as a currency or a medium of exchange. I think it's going to be cemented as akin to stocks or digital stocks in technology, I think, is where it's going. And we've seen this with ICOs, right? It's kind of like crowdfunding in a way. But you get this little token back and you can get rich off it. So I think that's where we will continue to see it headed. At first, look, I thought this whole thing was going to blow up. Honestly, I did. I thought like this thing is unsustainable and it will pop. And that's not to say I don't think it will pop. I just think it's got a little bit more steam left in it. I think what will happen is in 2018 we'll see this stuff continue to run rife to a point where it starts getting big enough that people start to get hurt and the government has to start taking notice. I think if you look at the current kind of size of the cryptocurrency market cap, it's not that big that it kind of completely kind of eclipses other markets. It's kind of a drop in the bucket. But once it starts getting bigger and bigger, and once you start having these situations wherein somebody's grandma or somebody's kid has bought some cryptocurrency and then it's either gotten stolen or the price has gone down, and you've got people that took mortgages out to buy this stuff and then they've gone bankrupt and people are foreclosing on their houses and their mortgages because of cryptocurrency, la-di-da-di-da, once that starts happening, I think the government's going to have to, okay, now we've got to come in and clean this stuff up. And I think that's where I see it happen. That might not happen for another year, 2 years, who knows? And in the meantime, the people that know how to manipulate these markets and use these markets, i.e. Wall Street, will continue to exploit them for that. I think what's really interesting is back in 2013 when I did Dogecoin and I moved over here, right? So I moved over to America in early 2014. All the people I were meeting, the people like Andreas Antonopoulos and, really vocal people in the space were, basically a lot more vocal about their disdain for the banks, their disdain for Wall Street. There was some overlap with the Occupy movement in a way.
Huh.
And that was kind of cool. So one of the people that got extremely involved in Dogecoin early on was a person called Ben Dornberg from New York, and he was involved in all that kind of stuff and really great guy, like a real good activist, and with good morals and wanting to hold like bankers accountable.
Yeah.
And I think those people quickly learned over the last few years that cryptocurrency is just about making profit.
Right.
Like cryptocurrency, instead of shutting the door and saying, you know what, we don't want you people who ruined the economy to come in and just ruin this one as well.
Yeah.
We've opened the doors. We've opened the doors wider than ever and said, come in and pour your money into it and use all the same tactics that you can't use anymore because they've been regulated away. Use them all in our unregulated market.
I was involved in like a startup in 1998, 2001, and like with the IPOs of the .com era, that massive, totally ridiculous explosion of value that just pumped money in, the benefit was it created lots of innovation. With cryptocurrency, the pumping into the valuation, it hinders the benefit of the solutions.
Yeah, like I'm not going to say that there isn't innovation happening right now. There is definitely innovation happening in cryptocurrency right now. There are good people working on good things and good technology. There is innovation happening, but I think what I'm seeing is very kind of loosely defined ideas be funded, right? Here's the thing: I don't think a lot of people understand that these big bankers and institutions and institutional funds, people with a lot of money, basically, when you get to a point where you have that much money, you kind of stop caring about creating value for society, and you start only caring about creating value for yourself. You start saying, look, I have $100 million. Like, I want to put that somewhere. I don't care where. That will make that $100 million $200 million. And I don't care what happens in between. Like, just find me the place that I can go and do that with the least amount of taxes and regulation and all this stuff, right? And that's where all the money's coming from right now. Because I think what Wall Street have realized is that, hey, this thing is
the blockchain is going to be something, man.
Right. Look at this thing. Like I think it's foolish to believe that any of these people in Wall Street are like looking at blockchain and saying, "Oh yeah, this thing is going to completely," this makes me laugh. Like, do you really think anybody in Wall Street right now, or anybody in traditional finance, is sitting around thinking, "Yeah, I'm really excited about how this thing's going to kill fiat currency and kill the US dollar"? Nobody, none of them are seeing that. All their wealth is in that, right? They're sitting around thinking about, hey, because we crashed the entire economy many years ago, I'm unable to do all this stuff undercover anymore that is potentially illegal. But you know what? Bitcoin lets me do that. And so they're coming in and they're trading on these like really like shady exchanges with projects that were popped up by some faceless person overnight that like suddenly becomes like a $1 billion economy. And they're doing that to compound their money. They don't care about the innovation. They don't care about the use case this all started out as, of replacing regular cash. They're purely in it for themselves. And so you're absolutely right. It stifles innovation, and it just kind of furthers, in my opinion, it furthers the kind of capitalistic reign of kind of of money. And it's sad to see, because I think there were a lot of people in the early days, at least, who I felt I saw eye to eye on in terms of using cryptocurrency to better society, and kind of help the people at the bottom. But it's definitely only helping the people at the top right now.
Who are the most influential people in crypto in the last year in 2018?
Yeah, that's a good question. I think you should listen to the people that have been in the space for a long time, but also the people that are not tied to a corporate interest. And that's hard to do.
How do you know?
That's really hard to do. But I think if you look at the people that are like developers that have a long history of kind of open source development, or that have been, I can just give you names. Like I think if you look at people like Andreas Antonopoulos, I think that guy is like pure of heart. He's a good guy. And he doesn't have like going around and educating people is what he does. And I think that's very pure. And I think that that in of itself, means that he doesn't have somebody paying, to my knowledge at least, putting money in his back pocket for him to say things. I think, there's several other people in the space. I think it's good to follow the Bitcoin core development team, and so they're not hard to find on Twitter and stuff like that, because they're going to do they will have political causes, i.e. that they think that what they want to develop is the best thing in the world, but they typically will, it'll be real talk. Like it won't be, go and buy this ICO, right? It'll be talking about actual challenges in the platform and the technology. So I think my advice would be just generally try and by the way, use Twitter. As terrible as Twitter can be sometimes, like for crypto and keeping up to date with stuff, it's the best place. Like you should know that every single news outlet out there in cryptocurrency, or probably 99.9% of them, all have corporate interests or are owned by somebody with significant investment in something else. And so never trust any news outlet. It's all about following people on Twitter.
What's the best thing you've done on your Twitter feed to refine the quality of content you're seeing?
The best thing I've done is try and really I've just been actively unfollowing anybody who is just constantly posting about the price. I think the price is a distraction.
Okay.
And talking about Lamborghinis and all this stuff. Like I think Vitalik posted. He posted the other day basically saying, "Look, we're making jokes about Lambos and other stuff. Like we need to grow up and focus on the fact that this network is still slow." And I think it was a very honest post, and I appreciate what he said, because I think he must be feeling it too. He's surrounded by people that have all got so much money that they don't know what to do with, and they don't want to work on the thing anymore. They just want to lap up the riches. And so I think I think those are the people to follow. People that are, and I think follow skeptics. Like I think follow people who have. People don't like following skeptics because they feel like it's like a negative energy or something, or maybe that skeptic will say something bad about something that they're invested in. But if somebody says something about something that you are holding $1,000 worth of, and based just purely on what they said about that thing, you have a negative reaction, you start disliking that person, then you really need to look back on yourself and do some reflection about why, what's motivating that reaction. Response.
My whole intention with Coloring Crypto podcast was to illuminate the blockchain, and let's talk about what can be impacted by society. But I gotta tell you, I'm fully distracted by the currencies, man.
Well, I think the thing is that nobody is immune to greed, right? I think ultimately greed is a very strong addiction.
How do you not realize you could have had millions of dollars?
I think you just have to not have that as your primary motivation. I know it's hard. I think, but it's I think it's a mindset thing, and I think what's been interesting actually, I think it's an American thing to a certain degree as well.
Right.
Just there is very much I don't care who I have to climb over, but I need to be a millionaire, or I need to be rich, and it's like a common kind of mindset that I've witnessed in America, and I've had to check myself, because I often find myself having the same thoughts, and I'm checking the price of cryptocurrency every day, and I'm like, oh, I could have been this rich, and it's like an addiction. It is like an addiction to a substance or to gambling, really.
The social mobility in the US of A is totally stuck. In Australia, I think it was high.
Yeah. I think the challenge there is that in America, and this is what has bred things the rise of libertarianism and that kind of stuff, which is honestly a lot of people in the crypto space are libertarian leaning. I think it's the American dream really only places focus on the individual and the family unit. So it's very much the kind of I've got mine kind of mentality, right? And the problem with that is that the problem with capitalism of itself is that it drives this individualistic thinking, and it stops people from thinking collectively or about their community, right? And so that's ultimately it's a challenging space for me to be in, because like I definitely kind of see myself as kind of like an anti-capitalist, but I spend a lot of time thinking about crypto capital, which is kind of weird. But I try to see it through the lens of how the technology, the founding technology, can be used to encourage better wealth distribution, like redistribute that wealth, and to societies that are underprivileged, and people who are thinking with a community mindset, rather than just thinking about how we can recreate the traditional or existing capitalistic system that everybody seems to, or years ago, were trying to rebel against, right? And so that's how I kind of look at it. I think you just need to stop thinking necessarily about yourself and thinking about how the technology can help others. And
how do we make a coin that serves the utility and not get swooped in by the speculation?
Yeah, that's very challenging. I have some ideas that I'm working on, but it's too early to talk about. But I have some ideas to like how we could do that. I think the problem is that with cryptocurrencies, I think we try to boil the ocean and kind of serve everybody at once. And I think, again, a more community focused approach could help mitigate some of that, the speculation. But my advice is, don't go and create a new coin until you're absolutely or somewhat certain that you have a solution. Like, I think if we're creating something new, like and trying to fix problems, like if you're creating a whole new system, don't fix the problems. Don't just transplant the broken ideas of the previous system. So, and I think Vitalik, kind of referred to this in his latest post. He was saying, look, like, let's not recreate the broken financial system. Let's create a new one. And I think that's something that people have lost sight of, because, they want to drive Lamborghinis.
I mean, like, honestly, like this, my research on you guys and then talking to you, like, I'm in this conundrum. I'm kind of like, oh my God, like the speculation on all these coins is fucking the whole utility of it. Mm-hmm. And so is there a way to dodge that?
Yeah, I think the way to do that is you make it boring to the people that have money. And that's not a simple problem, but how do you make cryptocurrency or a new cryptocurrency project not exciting to the people that are exploiting it right now? And one way is through the inflation thing. The inflation thing was somewhat effective and could be even more effective if you upped it. But there's other ways you can do it as well. You can insert things like trust systems and not go fully decentralized. You can do different things, I think, to make it less easy to create a speculative market about, and make it so that the thing is only measured based on its true utility. It's a hard thing to do.
Right.
You could have there's ways. So you could essentially forbid it from being used on exchanges, and that would require some form of centralization. Or there's ways you could do it though. If you built the equivalent of decentralized banks into the protocol, whereby people had a relationship with the banks, but then and those banks were like somewhat centralized, not completely centralized, but like big like mining nodes or something, for instance. And then you could make it so that all transfers have to go through that intermediary, right? And by virtue of doing that, you would stop exchange on third-party exchanges, secondary markets. There's definitely ways to do it. Like think about it this way. why can't I kind of freely from my own desktop without using a broker send you stocks right now? I think you build the same system in a kind of more decentralized and slightly trustless way. I here's the thing. I think trust is actually a good thing.
Yeah.
And I think decentralization at its most extreme in the way that it's implemented in Bitcoin actually is unnatural. It's
What do you mean?
it does not mimic human behavior. That I would trust nobody.
Right.
And I think because of that, I think that's why we have some of these issues. I think trust is a natural human thing. Like it's a natural human emotion. And to try and completely weed that out and say to everybody, no, you have the liberty of being an individual and you are your own bank. And if anything goes wrong, it's your own fault.
Yeah.
I think that's a very that isolates people rather than bringing them together. And
so how do you bring them together?
That's a challenge. I think you have to change that. Like challenging that and fixing that isn't just a technology problem. It's a society problem. And I think the society needs to change at the same time as cryptocurrency and the technology becomes available to enable it. Because if it doesn't, then like we've seen, right, we're just recreating the same broken system on some fancy new software. It's not even that fancy.
Okay, so instead of asking you what do you see happening in the next year, let me ask you what are you paying attention to?
Things I'm watching are just like I said, all the developers, none of the speculators. That's the only way to do it.
Where do you find that information?
Well, you can go and look at all the people I follow. That's probably the best way to do it. But I follow a lot of people that are also in the infosec space, like information security, security. That's a really good community because a lot of those people have crypto backgrounds, actual crypto backgrounds, like cryptography. And they're very skeptical of cryptocurrencies, which I find to be a really good lens to see it through. So that's something I would advise people is follow actual cryptographers who were doing things before cryptocurrency.
Information, what was it?
Infosec. Yeah, InfoSEC.
All right, man.
All good?
Well,
okay, cool.
Yeah,
well, let me know if you need anything else. But yeah, that was a good chat, man.
Thanks, Jackson.
Coloring Crypto is now a weekly podcast, releasing new episodes every Sunday for newbies who are curious and experts who think they understand. Tweet us at Coloring Crypto and leave us a review on iTunes.
Coloring Crypto. Subscribe now.